Welcome to the show, Entrepreneurs in Conversation with moi, Géraldine Jippé. I joyfully sit down every week with entrepreneurs, innovators, and creators to pick their brilliant, fascinating minds. My mission is to help them share their stories of struggle and success. The rich details from openly conversing serves as sound advice for us to hear and hopefully learn from. Enjoy the listens. Hi, Sydney. How are you?
I'm good. How are you?
Well, thank you. Very well. Welcome to the show. Welcome to Entrepreneurs in Conversation with Géraldine. I'm super happy you could make it today because I know you have a very busy schedule.
Thank you so much for having me. I'm very excited.
Super. So the reason I wanted to have you on this show is because you are an expert in anything finance, fundraising, and you've been working with startups for so many years. And I wanted you to share that with the audience in order for people to understand exactly how it works and how they should be thinking about their strategy when it comes to raising funds.
Absolutely. I think it's a very important topic and super on trend these days too.
Absolutely. So you are well established in the industry. Tell us more about yourself.
So how I got started was I had a friend a few years ago who said that if I was very interested in learning more about tech and startup, that I needed to go to Silicon Valley. So actually, within about 10 days of him saying that, I bought a one-way ticket and I moved to San Francisco.
Whoa.
And I moved in with him. and that was a great adventure. I was there for several months learning everything about tech and startup, and I was just so fascinated about the industry. So at the time, I was still working in tech for a Canadian company, and I was just falling in love with this industry, and I wanted to see what I can do to help bring all these great driven entrepreneurs to that next level. And so then I came back to Canada and built our VenturX platform, and that's how VenturX was born.
Yeah, that's so interesting. And as a founder, what was your biggest influence, which motivated you actually to take that, entrepreneurial path?
Yeah, so you have to really fall in love with your problem, right? So I really wanted to solve this problem. I saw that there were so many entrepreneurs, especially at the early stage, that was having trouble with funding, with having trouble getting their business off the ground. And I wanted to see, why is it so hard? Why hasn't this industry been innovated for so many years? It's very funny because this is the kind of industry that seeks innovation on a daily basis.
Super cool. And then which is the most typical route that actually all entrepreneurs might take, like love money, self-investment, I would say, or something else?
So the biggest shocking secret that I learned when I first started working in investment is that actually less than 3% of all startups in the world get invested. So there's very, very little, very few who actually go through all the different rounds. Even if you go through the early stage that we specialize in, like seed stage, pre-seed stage, you may not get to the higher rounds. It really depends. Right? So a lot of people go for bootstrapping, grants and loans, love money with family and friends. And then they usually stop there, and some will go forward and some won't. But the 3% is, as you know, it was a very, very low percentage. And it goes for all different kinds of startup, not just in tech.
Do you think it's absolutely, you have to be like a risk taker in order to dive into the VC world?
So this reminds me of a great story about a famous entrepreneur, Richard Branson. So people think that he is a risk taker because he has airplanes and spaceships, and because of his, very charming and outgoing and adventurous kind of personality. However, he is known as more of a very calculated risk taker. So what this means is that it's a type of entrepreneur that calculates your upside and your downside. How he started Virgin Airlines was a very interesting story. He was only in his 20s, and he was able to talk an airline to lending him the plane for free to do as a test market. He has no downside. That means he had to pay for nothing. And he was able to negotiate that because the idea that he was selling them, how marketable, this great concept was, and the fact that he was using it as a test market to test, I believe it was like out of New York. So he was looking for the highest like traffic airports and the highest traffic routes to test how many he can sell at what price point and what kind of branding and things like that. So if he was able to sell all of it, great. But if he didn't sell all of it, he also wouldn't have to pay for the airplane. So that is the kind of calculated risk taking that I think that more entrepreneurs these days should be looking towards and really doing your research, so then your upside is higher, your downside is not so bad.
What I'm very curious about is like VenturX is very well established, like locally and internationally. Have you noticed like any kind of disparities in terms of the way we invest either here in Canada or in the US or wherever you are established in the world?
Yeah, so the way that we invest everywhere is different. So I, for example, just came back from Asia. I was there for 3 months expanding VenturX, and I was also speaking at the FinTech conference there. And so I noticed that their version of startup was not the same as ours. The version of startup was anything that was before IPO. So they kept asking me strange questions. Investors kept asking me, well, what startups do you have that are 12 months from IPO? And I'm like, that's not what that means at all. I don't know why that's what you think that means. So their minimum amount of funding is $4 million US.
Okay, wow.
Which is for us super, super high, right? Especially when we're talking about our definition of startup. So it does depend on geographies everywhere. And then from what I've noticed in terms of Canadian versus American startups, the Canadian ones are better value. So our valuations, I compare to what our businesses are, and just the branding of being Canadian in general is very good towards the rest of the world. So a lot of countries and other places in the world like to invest in our Canadian startups. So that is also why I get a lot of leads coming in my way for partnerships as well as investors, because they want to have Canadian startups that have very, very high FDA approval, that have very, very strict clinical trials for their, early stage startups. And they have, all of these policies they have to go through with their fintech startup. And they know that the quality that we put out in the past, it will reflect the quality that we will be putting out in terms of innovation in our future.
That's so interesting. And according to you, what is the most important prerequisite in order for a startup, a small business, or like a big corporation to get this funding?
I would say that nowadays it has to be research. So I have over 200 that kind of ping me on LinkedIn without knowing anything about what we actually invest in, if we are for equity or for loan, what geographies we invest in, any of these things. And so I would say that the more research you can do to understand that this is the right investor for you, not just that this is an investor that you found, then the better your chances are going to be. Because, what do they say? They say luck is when opportunity meets preparation.
I agree. Literally. So there are very few women in the industry. I mean, it's no secret. And why? Why is that? Why do we have so very few women in the industry?
So I think that there's a lot of reasons about what the society expects from women and what women expect from themselves, right? So, and it's not, a place where there's a lot of industries where there's few women. And so almost every single position that I have had, every single stepping stone to get to where I am now, I have been the only or the youngest or the only colored woman or the only colored person in the room. And it didn't even matter how big or small this room was. It seemed like I was always the first ever to be put in that position or that chair. And that shouldn't be the case in 2020, really. And so I think that there are a lot of discouraging factors, of course, when it comes to having what society is expecting from women. So we are getting less funding than our male counterparts. We are offered less funding, but just the same way we were offered less salary for the same job. So you are worth exactly what the market tells you you're worth, but also only if you confirm it. So you can always ask for more. You can always go for more. You can always apply for more things that you may or may not get because, men are doing it. Why not?
Yeah.
And so that's one thing is that, we have ways of having certain expectations that women will accommodate to the things that you have given them. And it's a two-sided negotiation. It always will be. But also a lot of women will not go back and negotiate against anything that they're being offered, right? So that is one phase. And then the other phase is that, I had this really interesting experience from this woman who was like 60 years old. She came to our female boot camp, which were all female founders. There were only like 25 of us because I think that's how many there are in just the country. There doesn't seem to be that many. And what she said was so interesting. So she coaches CEOs all around the country, and she also coaches us on presentation. But what she said was, in your day and age, that she was talking about, our general age group, we were probably 2 generations in that room. She said, how many women in power did you actually see and you worked with at your first jobs? And we all said the same thing. There was one. There was literally one. There was one woman who was an actual decision maker. She was a director or a vice president or, any of these kinds of titles. And everyone else were men. So the confidence level of women to apply for more things and to help each other is very different because we didn't see that possibility before. And so therefore, why would in our minds, in our subconscious, even realize that there is a possibility out there? Like there's one out of like 25, and that's it. And so it really hindered a lot of women's confidence as they grew up because your first job makes a huge impression on where your career is going to go. And so if you really think back on your first job, like how many women in power did you really remember seeing, if any? And if it was one, then that's the average, but then you're also just lucky that you found one. And then, that's the only example that you had for most of your career before you jumped into entrepreneurship. So there's a lot of work that still needs to be done in both the corporation level as well as the startup level.
Yeah, I totally agree, especially in the tech world. I mean, there's so very little. It's getting slightly better, but the statistics shows that we still have work to be done in order to improve the number of women in anything, technology, finance, fintech, and more.
Absolutely.
And according to you, why actually women don't take that leap of faith and decide actually to ask for more? Because there's nothing stopping you.
I would love to know the answer. So even though we have hundreds of startups that are on our platform, I can tell you right now, about 10% are women. That means that we can't even find a lot of them that would even apply. And I would love for more women to come out and knock on doors instead of expecting more doors to open for them. Because as many as I am, we just sponsored a women's hackathon, and we sponsor a lot of women in tech events, actually with our platform, and we provide this to them. We would love for more people to be taking advantage of these kinds of opportunities and these kinds of gifts and these kinds of events and networking opportunities as well to do that. And I also do see at the same time that there's a lot of opportunity out there, but you have to know which one is the right ones for you and which ones are just people asking for your time, right? And as a woman, I can also tell you that I am offered more opportunity for sure in a lot of ways, but there are a lot of times not so good opportunities that a man would never be offered.
I agree 100%. I went through that experience as well myself. So I totally understand what you're talking about right now. If we go back a little to how actually we start negotiating with VCs or angel investors or, anybody who'd like to invest in our business, how to determine the term sheet, and for those who aren't expert, what are the key things that they have to think about?
Yeah, so there's a lot of terms and term sheets and samples that are out there. We have a lot of information on our blog as well, so blog at venturex.ca that you can look up and you have with you when you're on the phone. That's fine too. They'll never know. We also have templates and things like that you should be practicing. So all of these things you should have already had written down before you're on the phone. If you don't have your entire data room file, then you're going to go into the conversation very unprepared, right? So one of the things that I always tell our entrepreneurs when they are negotiating with their lead investors or just any investors is, what is your best case scenario and what's your worst case scenario? Write it down. When you write it down, you'll see that it's real, right? And so no matter what they say, you actually already have this prepared. You already have your upside and your downside. And calculate, how to answer these kinds of questions. So as a part of our consultation packages that I know that a lot of people do this as well, we prep certain questions and answers for them. And it leads into how you're going to be writing your term sheet overall, is what things that you've agreed upon, right? But there are also, depending on where you are fundraising, are certain red flags in term sheets. There are certain standardized things in term sheets as well. So note where you are fundraising and try and find samples of term sheets that are probably posted online somewhere, of your geography and of your area and your industry.
That's I think is key and essential. And to that, I was wondering, what is the thing that you're the most proud of in terms of success that you accomplished over the last couple of years?
I think that I'm most people, if you ask them this, they usually say some sort of award or achievement or those kinds of things. But those things really fade after you get off the stage and you receive your award. And as nice as those are, I would say that it's to see our startups grow. So my most recent investment is a company called Brewninja. And what they do is that they're kind of like a SaaS platform for breweries, cideries, and a lot of small businesses all around North America. And they are great founders, and I've had the privilege to really watch them grow over time and work with them closely and get to know them. And I think that it's kind of like watching anything that really is flourishing, right? And so those, I think, are always going to be your absolute best success stories. It's not the highest level of your fund or anything like that, or it's always those intangibles that make the biggest impact and those that change the most lives or the most businesses overall. You really want to look for that ripple effect.
That's excellent. And I was wondering if is this the reason why you launched these specific products like VenturX Progress Tracker? So how did you come up actually with that solution for entrepreneurs?
Yeah, so we actually reverse engineer what people were looking for in the market. So we knew we wanted to help entrepreneurs, but they were tied to what the investors and the funders were looking for. So we went across Canada, and we talked to, of course, the same people that I met when I was living in Silicon Valley, to get them to explain to me, okay, well, what is it that you're looking for? What is it that would most help you? And, why are these metrics most important to you? So that's actually how we came up with our first set of metrics that were financial runway, how you're managing your money, your burn rate. The next one being conversion, is how you're converting your leads into sales. And then engagement, which is a combination of retention and usage. So being able to show how you're progressing over these key metrics over time was something that was really important to the funders. So then they can also feel like you are growing, and if you're, not growing at exactly the same pace as everyone else in your industry, what's happening there. And they have a better chance of getting funding when they have all the information laid out, and everything is very transparent, and it's very predictable.
Mm-hmm. And I mean, with all the products that you set up and all the successes you had, now you are, I think you have the knowledge of a large, range of entrepreneurs. And what, according to you, what are the key skills that you need to have in order to be a good negotiator when it comes to start raising fund, and at the same time make sure that you nailed it, because that's key, that's important, and then that will set you actually for success in the long run?
Yeah. So when it comes to fundraising, making sure that you have the right timing. So there is actually a great TED Talk out there that's talking about what is the most successful way to run a startup. And timing in the market means so much. So if Airbnb and Uber came at the wrong time, it will never work. There had to be a certain level of disparity between different people within a certain amount of, metropolitan cities, and it had to have the same or predictable amount of demand within those cities in a way that is growing and in a way that is repeatable. So if it came at any other time, it wouldn't really work. But Airbnb, for example, came out of the last recession. It started during a recession, so which is why I'm very excited during this recession to see what's going to happen next. And so timing also is important when it comes to investors, because you don't want to be fundraising for 2 years. You need to be fundraising within like a couple of months, like max, for a certain amount of time that you need to stop fundraising and then start working on your business again. All of this needs to be properly timed out. So you need to have the right timing in the market for your business to be convincing. You also need to time it correctly on how you are fundraising, with which investors and why. When is your start? When is your end? What the first things that we ask them before we even sign them up for the platform is asking them, when do you need the money by? If they say yesterday, we absolutely know they have not planned this at all. That's not an answer. And if they say, in 2 years, also not a great answer, but at least that's an answer. And then the next one is, how can you plan to be more successful, is understanding when you are negotiating, who are you negotiating with, and what is your leverage? What is it that you have that is so unbeatable? Do you have a specific patent? Do you have intellectual property and no one else can copy? Is there a reason why you are the top at your industry, or your team is someone who's at the top at your industry? Or did you just hire all of your college friends? What happened to all of this story, right? So all of this comes to build what you have as leverage. It's kind of like you are playing all these different kinds of cards and you don't know what cards they have, but you have to guess. The other great thing that also builds to your leverage is researching what portfolio companies they already invested in. Maybe you can partner with them. Maybe they are your competitors, so don't go there. And there's a lot of like do's and do nots when it comes to how you are negotiating. But make sure that your first meeting, your absolute goal is to get to a second meeting. That is your actual goal.
I mean, that's a brilliant roadmap for those who are looking funding right now. I hope they will write that down just to make sure that they're well prepared. With that in mind, I mean, we 100% know the economy is kind of, going with ups and downs with the COVID time that we're facing now. According to you, like, where is the investing industries going? Do you have like a clear path on it's going to go down, it's going to go up? Because people are like building more and more companies and startups these days.
Yes, they are, because millions of people lost their jobs all around the world. And so whenever there's uncertainty, people crave certainty. So certainty doesn't mean that entrepreneurship is certainty. It just means that you now feel that you have control over your future. That's the only thing it means. It doesn't mean that you're going to get a steady paycheck. Nobody I know still has a steady paycheck. It's like, all random all the time. But what it means is that, yes, there's a lot more entrepreneurship coming up. Are there more investors coming up? We don't know. Because what comes out of a huge pandemic like this, or a huge flip in the market like this, reminds me of the game Yahtzee, where you put a bunch of dice like in this jar or in this like bucket thing, and then you shake it, and then you get to see which other numbers come out that are high and low. Mm-hmm. So everybody came back into this like jar, and you're being shook. And then you actually don't know who's going to be the new winner, who's going to be the new loser. Mm-hmm. So, co-working spaces like WeWork dropped their valuation from $49 billion to $2.7 billion. And all their investors, went down the drain. And so you don't know which is going to be the new Goliath, because this obviously would never work during COVID. Everybody had to shut down. And, Airbnb, same problem. Who is the biggest giant in that industry who then collapsed to their knees? And then what's going to take its place? We don't know yet. But these are the kinds of things that are very interesting when it comes to, a new page after the economy is rising back up. As investors, what's interesting here is that we notice that all the accelerators and startups, they are also cutting their valuation. Yep. So that means, just like the stock market, because the public market and the private market very much mirror each other. And when we don't know the answers as investors, as early stage investors, we look at the public market for data. Mm-hmm. And we look at what's happening in that industry, and should we be investing in this industry? Are people going public in this industry or not? Or they haven't gone public in 10 years, So just like the public market, the private market is also cutting their valuation. So that means that instead of making 2 or 5 or 10 investments a year, we can actually double that for the same amount of money. And we can invest in more things. Would that really mean that there's going to be more winners? We don't know yet. It does depend on who the highest player chooses. Mm-hmm.
I mean, we're almost at the end of the interview, and before to end this really interesting interview, I just wanted to know if any entrepreneur would become like an angel investor, what would be the top 3 advice that you will share with them, especially for women?
I want people to be more angel investors. So one of them is you can contact me. I'd be happy to answer any questions that you have if you're interested in being an angel investor and connect to some people that may be better help for you. Next one is understand why you want to be an angel investor and what kind of industries you want to invest in. Mm-hmm. So, for example, there's impact investing or there's technology investing. Impact meaning, you want to do social good, but it has a very broad definition. So you have to see, which kind you want to do and why not. And then also understand which level you want to invest in. So there are investors that are angel investors, but they only invest in later stage. Mm-hmm. They do have to have enough money to do that, but they do only invest in later stage. Mm-hmm. And I think that's a really great way to go about it too. Nowadays, with more uncertainty, mm-hmm. there are more angel investors that are trying to invest more in later stage anyway. If they have the opportunity to. And so those are the 3 things that I would be looking at. And those are the 3 things that I would kind of work on yourself in order to understand what kind of angel investor you really want to be.
All right. That's it for today. Thank you, Sydney, for being on the show today.
Thank you for having me. It was great.
Have a good day.
You too.
Bye. This is the end of the show. Share the show with your community. Make sure to listen to the next episode on Spotify, iTunes, Stitcher, and Anchor, and more. Follow us on Instagram at ecg.podcast, and me, Géraldine Jippé. Follow me on Twitter, LinkedIn, and Instagram. See you next time.